Tomorrow will be a huge day for the markets and the economy as the Federal Reserve is set to cut interest rates for the first time in 4 years. Right now, the debate is whether or not they'll cut interest rates by 25 or 50 basis points. Right now, the odds are slightly higher of a 50 basis point cut, but that was before this hotter than expected August retail sales numbers coming in at positive 0.1% month over month compared to negative 0.2% estimated. So right now, it's a debate whether or not it'll be 25 or 50 basis point cut. I don't think it really matters. Either way, cuts are coming. And I think it's more important in Jerome Powell's speech tomorrow in the Federal Reserve meeting to talk about forward guidance and the chance of future cuts, and talking about how many rate cuts are expected by the end of the year. The futures market is pricing in right now 100 basis points of cuts by the end of the year. So whether it's a 25 basis point cut in tomorrow's meeting or a 50 basis point cut, at the end of the day, it doesn't really matter because it all depends on the nuance and the words of Jerome Powell's speech and the dot plot of future cuts, not only for this year, but also for next year. So I think that's more important, in my opinion, is expectations of future rate cuts rather than what cut we're getting tomorrow. So I don't think 25 or 50 basis point cut really ultimately matters, in my opinion. And then a lot of people are saying, look, if the Federal Reserve is cutting interest rates, that's not necessarily a good thing. And I actually disagree with that. It could be a bad thing if the Federal Reserve doesn't have it under control and if the Federal Reserve is cutting interest rates into a recession or what is known as panic cutting. But I don't think that's the case right now. The economy is still very strong. Earnings growth is very good. The consumer is very strong. Retail spending is still pretty good. This retail sales report came out really good. And all kinds of consumer spending data show that the economy is still pretty strong. So I think the Federal Reserve is cutting interest rates into a soft landing. And in my opinion, this is like 1995. And then the market did very well throughout the 90s. And I see that the case now. There's a chart by Goldman Sachs that shows that if the Federal Reserve cuts interest rates into an economy in either a no or soft landing, that the market does well. Look, that can't be said if obviously the market falls into recession. But I don't see that happening, at least in the next 12 months. The economy is still too strong. I think a recession, in my opinion, happened all the way back in the first 2 quarters of 2022 with negative GDP growth due to high inflation. And that's when the market really had its lows, was in 2022. It's very rare to see 3 recessions in 5 years. And I don't expect another recession to happen for another couple years. Look, the first recession we had in this 5-year span was the COVID crash. That was short-lived. And then the 2022 recession pretty much lasted, I think, in my opinion, throughout until mid to end 2023. And because of that, I don't expect another recession really anytime soon, at least for another couple of years. I think the market will continue to do well. Obviously, there's some worries about China's slowing growth and their weak industrial manufacturing numbers and some issues with the real estate sector. And there's some issues there, especially right now their strength is really due to exports. But if we have some higher tariffs, that might hurt the Chinese economy even further. But that's really the biggest risk. And right now we're really trying to do a lot of, manufacturing within America, pretty much onshoring. So I don't really see that necessarily being a big thing, at least as of now. So yes, the Federal Reserve is cutting interest rates into some weak seasonal pattern. September is usually pretty weak in the market, but overall, the fact that we're getting rate cuts is more important than if it's going to be 25 or 50 basis point cut. And the bigger thing is that the M2 money supply is starting to go up. And that's the amount of money in the economy. And with these interest rate cuts, the money supply is going to go up. And that usually bodes well for financials, industrials, tech stocks, small cap stocks, and Bitcoin, in my opinion. Bitcoin's been trading sideways for about 6 months. And I expect a pretty monster move by the end of the year, especially once the Federal Reserve starts their cutting cycle tomorrow. And even more so once the elections are done with and we have certainty about the outcome of that. But either way, I see a strong rest of the year, especially after the elections, in my opinion.